Wayne. Tell us the Wayne Clark story.
All right. Well, it's quite a few years to go through, but I won't go all the way back to 6 months old. But thanks, Michael. Thanks for inviting me on. So pretty much, a lot of people know me, but they might not know a lot about my background. So I started life in a family that was actually involved in the building industry. My dad was a diesel mechanic when I was very, very young, and he owned a garage, I think Caxton Motors from memory was what it was called, in Brisbane. But then he did some additional study and finished up with some qualifications, and had a natural disposition for anything to do with engineering or things that, how do things work. But he anyway started building some wrought iron handrails under his house. He bought himself a welder, and so he made a set of wrought iron handrails, steel handrails, for our patio, and some gates and a few other bits and pieces. And a lot of people liked them and asked him where he got them from, and he said he made them, and they asked him whether he could make them some. So he started doing that under the house, but then it eventually led to him starting a business. That original business was called Clark and Farmer, and they specialised in wrought iron sort of handrails and step stringers and those sorts of things. Anyway, moving forward, he developed into a structural engineering business, and they started a company called, my father and mother started a company called Australian Fabricated Industries, which was one of the reasonably big players in the industry back in the 60s and early 70s. Did a lot of work around Brisbane in the early phase of the high-rise buildings going up, and I know that when Dad would have guests come up and stay with us, he always took them around and showed them all the jobs he'd done. And we were usually in the car being bored stiff by the same story over and over and over. But anyway, so that business ticked on. I worked for it for a few years. And strangely enough, one of our biggest clients was a company called KD Morris.
Oh, yeah.
That was in Montague Road, just down from the QBCC head office. It went belly up in the early 1970s, and it turned out to be the longest company wind-up in the company wind-up history.
Didn't you just say
years to wind it up?
It was just recently completed, was that right? Is that you told me the other day?
Not that many years ago, yeah. It took 18 years, so... so that really hurt Dad, and that caused the demise of Australian Fabricated Industries. So that business went into liquidation, and he had another business that he kept working in for a number of years, and he continued to work until he, into his 80s really, from home. So yeah, it's a bit ironic that, or strange that I finish up in this industry, looking after making sure that people don't get caught. So my background, I've had a number of clerical jobs in my early days, which led to management roles. I've worked as a bursar in a private school, a well-known private school in Brisbane. I was also the residential manager of a College of Advanced Education campus in Goulburn in New South Wales. And I came into the building industry again in the early 1990s, and was a credit manager there for about 9 years with a couple of companies. Then I started my own consultancy business in 2001, which is still running as a part-time thing. But I took over, was offered the opportunity to take over as the executive director of BICB in 2012, and that's where I currently am, obviously.
Yeah.
So I really enjoyed that role.
Yeah. I think I would have first met you when you were one of your credit manager positions, or one of your...
Yeah, that's right, we did.
So the BICB, so my connection with the BICB goes back to those days in the mid to late 90s. So just for people, so just to set a bit of scene for my involvement was I was the inaugural compliance manager for the Queensland Building Services Authority, which was the predecessor of the QBCC. And I took up that role sometime in 1996 or 97, I just can't remember. But one of the things I recognised straight away was that in terms of data, that I needed more information to find out or to identify recalcitrant payers, the licensees. And someone told me to go and see, at the time, it was run by a gentleman called Sid Thomas. Told off, I met Sid, and we had to go through a bit of a process, become a member of the BICB. I don't think it was typically done in those days. Yes, from that time onwards, I've been sold on the organisation, because I can assure people that are watching at the moment. If you think the building industry is a bit wild these days, the late 90s was as wild as woolly as it gets. So for me to take action on behalf of the BSA to suspend or cancel licences, I really had to have my ducks in a line to make a case that the contractors weren't meeting the financial requirements for licensing or along those lines. So that was my connection with the BICB, and obviously got to know a lot of people like yourself and credit managers, because I used to attend a lot of the meetings whenever I could, the regional meetings. Do you still have the regional meetings? Do you still?
Yeah, we still have we haven't, we do it via Zoom lately, but we are going back to face next month. So hopefully that'll continue. If we can skirt around we've got to be compliant with the COVID restrictions, which we will be. So we're hoping that we can do that from now on. We won't be going interstate, obviously, just yet, but we are rolling those meetings into one big Zoom meeting every month for those regions.
No, I think I mentioned to you when we were having our pre-chat the other day that I used to get so much benefit from just physically attending those meetings, particularly the Gold Coast, which doesn't surprise you. The Gold Coast meeting, just to be able to discuss with people what's happening and what they're seeing down there. So from the BICB's point of view, let's just run through. Can you just give a high level what the BICB does in terms of its functionality?
All right. Well, just to give you a little bit of the background to it, it started about 100 years ago. We don't know exactly the date, but we think it was around 1919. Started by a group of timber merchants in Brisbane that got together. They got the idea from the United States, and that organisation that they pitched the idea from still exists today in the United States. It started around 1906, 1907, and it's called BCIA, or BICA, Building Industry Credit Association, and we became the Building Industry Credit Bureau. So ostensibly it was a group of timber merchants that used to meet periodically and talk about who they were trading with. Are they paying their bills? And that's where it started, and it continued in that vein for a number of years. It became an unincorporated association, and then in 1962 it was incorporated, and we run as the same legal structure these days as a not-for-profit public company. So because we're a not-for-profit, ASIC give us this special dispensation to drop the word limited out of our title. So instead of being Building Industry Credit Bureau Limited, we're just Building Industry Credit Bureau. So we're basically an organisation that exists to provide services for its members. The members own the business, and they incur a liability of $1 if it all goes pear-shaped at some time. So it started out life, just as that meeting thing, and then they started to add some technology to it. When I first started becoming a user of BICB in 1990, we were getting packages of these microfiche every month. which I'm glad those days are over. It would be a pain to try and package those things up every month. So that's the way it was. We'd get this package of stuff and we'd view it on these little plastic sheets on a microfiche reader, and we'd have to write all the information down. And but then it advanced into the modern age where we developed an online database system for our members in the early millennium. So around about 2001, 2002, I believe, that all came on board. Might have even been a little earlier than that, but that was the basis of the online database system then. And when I took over, it was still the same format as the original format, which was pretty good, better than it used to be. But I decided that we really did need to improve our offering to our members, and we needed to go from ostensibly a Queensland-based, Northern Territory-based, Northern New South Wales and into Victoria, right across the nation. Because there's no other organisation that does what we do on a national basis. There was another organisation in Sydney, and it still operates today, but again, it's only looking after New South Wales. So we were able to do that because we improved the way we loaded our data. It was a barrier to us in the past, so we had to improve the way we actually loaded that data from our members. And it's a massive amount of data that we get every month. It's hundreds of thousands of records. So we did that, and that enabled us to then launch ourselves nationally, and that happened about 5 or 6 years ago now. And we developed the database system quite extensively during that time, and I worked with a committee of members on that. Some of those members might even be tuning in today. So it was me coming up with some thought bubbles, and I'd write them down and I'd throw them at the committee, and they'd give me a critique on my idea, whether it was good or bad. I think most of them got through. There was a couple of bad ones that didn't make it through. So that process was a cooperative type process. It was always, engaging with our members. I didn't want to invent something or create something that nobody wanted. So it had to be in conjunction with our members that used the system. And that was a very, very good process to work through. We're now in the third stage of our development. Again, I've already had a couple of meetings with the committee, and what we're developing now are a lot of the predictive stuff that we've been wanting to do for some time. So we've actually engaged a data scientist, and he's going to be drilling into all the data that we have, and he's going to be looking at how we can extract information to build these predictive tools that where we can actually accurately, or hopefully accurately, predict failure. And so we're going to be looking at tens of thousands of records, and just to see, we're going to be looking at the insolvent companies as well, just to see what data was present leading up to the insolvency event. And then we're going to build that into our system as these predictive tools. So we want to actually create a dashboard page for our members, so the members can look at that dashboard page, and the system's already done a lot of the work for them. It's actually crunched the numbers and come up with a risk score and a percentage of what's the likelihood of this company going belly up in the next 12 months or so. So one of our joint venture partners, we've been talking to them. They've already done an exercise with the court listings, and they've looked at I don't know how many companies, but 10,000 insolvent companies. And they were looking at the court actions that were present leading up to the appointment, and they've been able to give each of those court actions a weight. And so that's looking at it, from what I've seen, it's a pretty good indicator of future failure when you see these highly weighted types of court actions present.
So the data at a very high level, correct me if I'm wrong, but the data at a really high level is your members submit monthly trial balances.
Correct.
And the payment, the actual real payment arrangement, the payment outcomes are grouped in current, 30 days, 60 days, 90 days, correct?
Correct.
And then, and how many roughly members have you got?
221.
Okay, representing certainly most of the biggest suppliers around would that be?
It's a big cross section of the building supply industry in Australia, and some of the iconic suppliers are involved in the industry.
Yeah. So all that's bundled into one big thing. So what's the monthly sort of aggregate of the trial balance dollars? If I'm sort of, it's a bit of a.
Yeah, it averages $2.5 billion worth of trading data a month, and that's on around roughly between 60 and 70,000 debtor entities that our members have been trading with. In total, we've got about 170 plus thousand debtor entities in our system, but that would include insolvent companies that stay on the database or companies that might not operate. But month to month, it's between 60 and 70,000 debtor entities that we've got live trading data on.
So people that are listening who don't really, or watching who don't really understand the significance of this organisation, there it is in a couple of sentences. You're actually talking about credit managers or credit sections supplying, who are these days I know, very, very, very attentive to the details that manifest themselves in terms of their trial balances. If something's current, something is current. Disputed amounts are shown as disputed amounts. Is that correct, or is it?
Yeah, well, we go to great lengths to make sure that our data is accurate as we can possibly make it. So, for example, we ask our members not to send us the retention balances on their trial balances, or if they do, to flag it so that we can exclude it, because we don't want that distorting the figures. Obviously, there's going to be some data in there that there's all sorts of reasons why it might be sitting there. And you can generally, looking at the data, you can sort of pick up some anomalies where, you might have a large debt sitting there belonging to one member at 90 days plus, but you can see they're currently supplying. So there's obviously a story behind that debt parked at 90 days.
Yep.
So we encourage our members to communicate with each other. They can do that through our system. All the contact information, including the email address, the telephone numbers, are all there. But they can also, just at the click of one button, request a trade reference from that member. So it's just bonk, and that shoots out a request for a trade reference. Or they can simply generate an email or pick up the phone. So we encourage our members to do that, not to jump to conclusions. They need to understand how to read the data in our system. And we try our best to engage with our members to provide that insight before they really start using the system proper. So there's a fair bit of training goes into a new member, and we're always available for any queries that they might have. We're always happy to answer those queries and try and demystify some of the things they're looking at. And that's why it's so important for us to take it to the next stage now, to build these predictive tools with a summary page available on each data file in our system that actually gives them a very, very good summary of what's actually going on. And then a score, to say, well, hang on a second, we're seeing a pretty serious deterioration in a lot of the major metrics in this particular business. So we don't just look at the trading data. You've got to look at a number of factors together, because that builds a picture of risk. And so if you're looking at some of the ASIC notices that might be coming down the pipeline, if you look at the court actions that might be present, if you look at what the licensing bodies might be doing to that entity, and you look at what the anecdotal information might be coming from our members, it all joins together to actually give you that critical information where you can actually make a fairly good informed decision about what you should be doing.
Yeah, it's like I said at the very beginning, I'm a data freak just like you are. but it's so important that there's still humans looking at the data and have the capacity to come in and inject some sort of human input. And I think there was a meeting, not our pre-chat meeting, the other meeting we had recently, where you mentioned with something I know was struck with Janelle Kerris, the founder of Helix Legal. It was that meeting where you mentioned that one of the, there's ASIC notices and there's ASIC notices, but one of the things that, from a practical point of view, and you might remember saying this, was that the ASIC notice that always gets your attention is whether or not there's been a change of registered office, or the accountants have changed there, which from a practical perspective can mean, well, maybe they're not paying their accountants.
Yeah, I mean, you often see that. You'll see the change of a registered office, and that alone is not enough. But if you see that and you look at some other stuff, I always see that as a red flag. And if you've got a deteriorating payment pattern and some other things, some court actions going on, and a change of well, it's actually more than a change. It's actually the withdrawing of the permission to actually be the registered office. And quite often that's an accountant or a legal firm, and they might not have had their bills paid for a while.
Yep.
So all sorts of reasons, could be present. But yeah, it is definitely one of the red flags when read with other data.
Mm-hmm. So your predictive modelling interests me. So which is absolutely, the more we can move people into likely scenarios based on data, or present data, the quicker important conversations can happen. And it doesn't matter whether it's a major supplier having a conversation with a licensee or a contractor or one of the industry regulators. To my way of thinking, a major supplier who decides to terminate a relationship, that's a strike which is more effective and quicker than any regulator can do. And I'm not putting regulators down for that, because there's very, very important due processes that have to be worked through in that regard. But that's the power of your members, that they can make critical decisions. Now, of course, that doesn't make, if it's a plumbing, if it's a major plumbing supplier or something like that, well, they can go off, the contractor can go and find another supplier. But if they're a member of your organisation, well, then your organisation, the members have got an opportunity to have a chat before the new member might commits to providing supply.
Absolutely. And one of the good things about our data is too that there are a number of companies that operate in the same space in terms of what they supply, and you'll often see one of their customers buying from one of the companies that are a member 1 month, and then not paying that bill and moving across to their competitor and buying for them. So it's it's sort of like tag team going on. And members often make comments about that sort of thing going on at those face-to-face meetings. So it's good anecdotal information, and I think there's always a place for the face-to-face meetings. You think in this day and age you could do without them, but there's actually quite a bit of value that comes from it. It's a number of things. The members get to know each other and they enjoy, being together, once a month and having a bit of a chat. And, some lifelong friendships have been made out of members, being in the same room talking about debtors. I've still got many, many friends in the industry that I met at BICB meetings.
Yeah, it's so important. And it's also, it opens up the opportunity for members might have a piece of information which by itself doesn't mean anything, but in a conversation with a couple of other people, those other two people might have different, pieces of information which are relevant. And you put it all together, then all of a sudden you've got, oh, okay, I didn't know that. Now that makes more sense. And just raw data by itself can never cover those situations. As much as I love data, it's that human sort of insight where people can sort of draw information from other humans, which mightn't have found their way into the actual data crunching of the systems.
Yeah, absolutely right. That anecdotal information and that human intelligence that goes into the stuff that might be coming back from the sales reps on the road and all those sorts of things is very, very important. It all helps to build up that picture.
I remember, no names, no pack drills, but one of the critical pieces of information I got from attending one of your meetings was that I learnt. So I was in confronting an awkward situation with quite a significant builder. So this is when I was the compliance manager of the BSA, and I was being told all sorts of stuff, and the financial person that helping me we were being told all sorts of stuff. But then, just literally, one of your members just told me in a meeting, "Oh, I saw the removal truck out the front of their property the other day." That was not what I was being told, So it was basically an indication to me that they were going to do a midnight run, and what we were being sold was a load of crop, basically, in terms of staying the course. And so, like I said, in itself meant nothing to that member really, but to me it went holy dooly.
I've got a couple of questions from members or from people that are participating in this too. Do you take those, Michael?
Yeah, mate.
Somebody's asked what role is big data going to have in the building industry, in the construction industry in the future?
Go for it, Wayne.
Well, but this is only my impression of it. I think it's going to play a big role. We're now in uncharted territory at the moment. So risk has gone up massively in the last 6 months, and we haven't seen the worst of it yet. This is from my perspective anyway. There's been a lot of artificial stimulus going on in the market at the moment. And I think that's reflecting in the way companies are still paying their accounts. We've seen no major blowout in the payment patterns this year through this COVID period than we would have seen last year. In fact, we think it's probably slightly better. So that's an indication that there's still cash washing through the system and people are still able to pay their accounts. I mean, that GST and PAYG stuff coming back from the federal government, it's massive. You can imagine, the purchases that a construction industry business would be incurring, and then they get that 10% of their purchases back as cash in their bank. So that's a fairly significant amount of money that's washing through the system at the moment. But that's come to an end. That phase of it's come to an end in June, even though money was still being paid into people's accounts in August. There will be no more money from that source. You've still got the money coming in, to employ people, and that's going to drop by $300 at the end of September. And you've also got the extension of the moratorium on the insolvency stuff, where you've got those new rules around bankruptcy and the wind-up applications going.
And also directors' liability in terms of debts.
Exactly right. That's right. So
that's been pushed out for another 3 months. I read the other day. So it was
31st of December now for all of it. Yeah.
And I know. Sorry to interrupt, but I know a lot of respected insolvency people have got very differing viewpoints about whether this is just artificially holding in place collapses, which are going to happen, which are inevitably going to happen at some point in time. Once these protections are done away with, which they have to be done away with at some stage, that's when the collapses are going to happen.
Yeah, that's right. So I'm actually trying to answer your question here, but in terms of big data, we're also seeing all the debtor underwriters very, very nervous at the moment, and they're reducing cover. We know that there was a big knee-jerk reaction by the largest debtor insurance provider, probably sometime around April, I think, when it all started to bite, and they pretty much nilled their cover and left people in the lurch. And I think their decision happened on a Saturday. And everybody came back on a Monday and didn't have any insurance cover. It gradually got restored. I believe they're offering around 50%. But I'm hearing of businesses now, major building supply businesses, that the major underwriters are not even interested in insuring anymore. So we know that there's a presumption that risk is going to get a lot worse at some point in time. We know that there's been about 65% worth of insolvency appointments that have just disappeared.
Mm-hmm.
But it doesn't mean they're not out there. They're just going to show up at some point, and that point's probably going to be January, February, March next year. And so you're going to see, I think, a backlog of insolvencies come through. And we had a look at the data the other day, and it's around an average of 92 insolvent businesses that are not appearing in the records at the moment. You know, the common term that people use is zombie companies, and there's a lot of zombie companies out there. It's just trying to identify them. So we think that they'll all come with a rush, the backlog, maybe in the first quarter next year. And then you're going to get the normal flow of insolvency appointments for companies that you would see, you know, on a normal month-to-month basis. But what's the Australian economy going to look like in January? You know, we've already had 2 quarters of negative growth. I'm not an economist, but I'm predicting we'll get a 3rd quarter of negative growth. How long since we've had 3 quarters of negative growth in Australia? We're in uncharted territory here, and it's going to have a massive impact on GDP. It's going to wipe billions of dollars off the Australian economy. And then you've got people, you know, massive job loss with people. And one of the good things that we're seeing is that there's the stimulation package that the federal government offered to first home buyers and renovators. We're starting to see that turn into work on the ground. So we saw a 12% increase in the approvals in July, I think it was, Michael?
Mm-hmm.
July or August.
Mm-hmm.
We'd seen 2 consecutive month falls prior to that. And then the stimulus gets announced, and we're starting to see an increase in those numbers. Another interesting stat was the lending for purchasing land has gone up by 145%. And the biggest region for the take-up of loans to buy land is Queensland.
Yeah.
It's no, what's your best guess at the worst region in terms of lending to buy land at the moment?
That would be Victoria.
You'd be right. So, you know, so there's a whole lot of things that are just completely unknown. Nobody has ever lived through anything like this, and we have no idea what the long-term impact or even the short-term impact of COVID's going to be on our businesses.
No, I totally agree. And whilst, you know, obviously the wage stimuluses provided by the government have been absolutely critical in giving people an opportunity to consolidate and come out the other side. I understand that there's a day of reckoning that's going to come for a lot of companies, and the insolvency stuff just tells you the story is that the appointments are down so much compared to this time last year. So they've been held in abeyance somewhere. And the construction industry is just so reliant on different things. For instance, you know, what I would call the mid-tier commercial, you know, units and mixed stuff and things like that, heavily reliant upon overseas investors. Well, you've got to have people coming into the country.
Absolutely.
So, you know, it's one thing to open up the state borders, but I can't see the external borders being opened up for a considerable period of time. So, in, you know, universities, I think I was saying before, I live around Kelvin Grove, which is obviously a university hub, and all the units have been built around here to furnish a need for students. It's and you just, so I think I explained it to someone the other day. I see, if you look at the industry in 3 segments, I see a lot of stimulus and a lot of things working in the home building area because of the grants and things that you just went through. I also think from an infrastructure, the big yellow machines, the roads and the bridges and everything like that, they'll do okay.
Yeah.
Because of a lot of infrastructure spending, which has been brought forward, a lot of it, but it will be hurried through. It's this middle commercial tier that I have concerns about.
And the commercial sector.
Yep.
The high-rise residential sector.
Yeah, that's what I was sort of talking about, that high-rise residential sector.
Yeah. So it's, look, it's in a major contraction phase at the moment. And then you've got the added complications for the Victorian building industry, where you're only allowed to have 25% of your workforce on a construction site. You've got those restrictions on people moving from site to site during the week. So it's got to be having an impact financially on the companies that are involved in those constructions, because it's blowing out the build times, which has got to be adding to your costs. There's all sorts of things that are going to, come to the surface after they're able to go back and, some sort of normal lifestyle down there.
The ABS figures that were released a week or so ago, in terms of financial data, up to the end of June, it showed the contraction in the construction industry Australia-wide was really significant in terms of wealth being generated. Was about 8% across Australia, but that wasn't factoring in the second wave in Victoria, because this was at the end of June. So the end of September stuff will be dire because of the drag that Victoria will be putting upon the and so much. Victoria is so important from a supply chain perspective and all sorts. Besides just confidence issues, it's GDP stuff. It's I think it's the biggest port entry for overseas stuff coming in Australia. So it is. It's also the largest contributor to the Australian economy as well. Yeah. So it's really the driver of our economy down there, in a big way. But just to answer that question, I didn't get to the point he made. Yes, big data will play a part, I believe, because people are going to be looking for a lot more data to base meaningful decisions on. And we've already been approached. So we're in a marketing push at the moment as well. And we're getting approached by lots of these organisations that I didn't even know existed. And one of them is one of the suppliers to big data, where they actually draw together data from all different sources and then package it. So they're talking to us now whether we'd be interested in providing data. Yeah. I've only had a cursory discussion with them, but I think it's going to become more and more important that that companies have access to this type of information, particularly in light of what the debtor insurers are doing now, because you're being asked to cover a lot more of the risk than you were being asked to cover before. The premiums are going up, so it's making it less affordable for companies. So I think they're going to have to make some pretty smart decisions to make sure that they're not incurring massive bad debts. Otherwise, they won't have a business. Yeah, and you've just reminded me, and I'll apologise now. I sent to you when we had this pre-chat the other day that I was going to send something through to you, and I just remembered I forgot to do it in relation to one of the discussions we had before. What with you was with Kate Raymond, from the Assistant Commissioner from the QBCC, and she was quite open and disclosed that that they are becoming, or they're on a journey becoming an insights-driven regulator. And I, as an ex-QBCC and BSA person, I am so on board with the regulator becoming insights driven, because it basically means that they'll zero in on the problem child, and the rest can go about their business. But she disclosed that one of the inputs that they were getting was from your organisation. So kudos to you, because it's clearly recognised that the inputs that you can provide in terms of data is so valuable to a regulator, but it's valuable to everybody. It's valuable to every person who's going to make a commercial decision. Well, if the regulator's doing their job, they're going to be spotting these problem childs and hopefully dealing with them in a regulatory way.
which is going to make it better for those that are trading with those organisations.
No question. So we've got some more questions here, mate. So you click on which one do you want to take? There's a few there. Can you see them?
Let's have a look. How have you seen your membership change and grow in the last 5 years?
Okay.
Okay. Yeah, we actually have seen a growth in membership, and that's partly on the back of our national expansion. When I took it over, we had around 170 members. We've got currently 221, so that's fairly big growth in that time. But we want more. It's interesting. Since I've been in the chair, you'd think it'd be an absolute no-brainer that you'd want to get access to this information. But I found it to be quite a hard sell for one reason or another. You know, people are worried about parting with this information. They're worried about how it's going to be used. All the assurances in the world don't seem to get them over the line. Some people just, quite frankly, don't see the value in it, which also surprises me. So there's a myriad of reasons. But this push, and also for many, many decades, we've tried to sail under the radar. We've always been a very conservative organisation, and we've tried to be a bit of a clandestine organisation. But those days are well and truly over. I mean, since I've been in the chair, and this is with the full support of the board, they want us to actually get out there and market ourselves, because we really have a product that is, extremely valuable to the building and construction industry. And if the industry as a whole have got access to data like this, the industry as a whole is going to fare a lot better in terms of their bad debt exposure to the marketplace. So the more members that we have, the greater an impact it's going to have on your ability to manage your risk in your business. And so, you know, if you've got anybody out there that needs to be a member of the BICB or, that would benefit from being a member, by all means, put us in contact with them. If you're a member, well, then certainly have that conversation with them and give them your experience as to how being a member of the Bureau has assisted you in what you do in your business.
Look, like I said, I'm pretty unique. and I certainly shout your praises from everyone who I talk to, because I've got the unique perspective of being, like I said, been getting the BICB, becoming a member of the BICB, the regulator becoming a member back in the 90s, and now, in my business, where so much of what we do is, we can handle a myriad of matters. We can handle front end stuff. We can handle back end stuff. But the type of stuff that I do not get any joy out of is out and out heavy-handed, draw your swords and go back 10 paces disputes. And a lot of that can be avoided by people making smarter decisions right up at the very front. And it's one of the questions that I've noticed there, but we'll get around and slightly different is, I think the idea of, do you think the industry is over-regulated or something like that? There was a question there amongst it. Is the answer to the industry's problem more regulation or better access to information? So if you don't mind, I'll just have a crack at that first up.
Go for it.
The industry needs to be well regulated, absolutely. But I think we've fallen into a pattern of just relying upon the government to fix all the problems with the industry. And my attitude, and all my articles, over 100 articles I've written now, is it's all driven by almost probing and pushing and pinching and hitting contractors to say, wake up, take as much responsibility as you should be taking to manage your business, and manage it almost with a view of, if there's not a regulator, what would you do? What would you do? How can you run your business? So managing risk, I think, is very much an important part of how the industry needs to reshape itself and reset itself. and that has to be done from the bottom upwards. So I see it as a regulation, yes, coming from the top down to deal with the really bad nuts, but the rest of it, I think, is the reforms that should be driven from the bottom up, and a lot of that's got to do with contractors identifying the risk and making commercially smart decisions.
Couldn't agree more, Michael.
So what other questions we got there? So how do I join? Well, I think, we'll certainly promote your organisations through these, and I'll put people in touch. What else we got?
We have a public website. Just go, I think it's www.bicb.com.au. That'll give you all of our contact details. We're actually doing quite a bit of work on that at the moment, and there will be there is already an application form embedded in that portal, but there's going to be an online application which we're currently developing, which will be available in a number of weeks, that you can actually apply online and pay online, or you can just contact us and we'll send you all the necessary things that you need to complete to be a member. It's simply a one-page on double-sided application form. You need to be obviously in the building industry to qualify for membership and be a supplier of a product in the building industry, but that's pretty much the only criteria. And we assess your application within a day, and you'll be a member within 48 hours.
Fantastic. Now, one of the random things that you said to me the other day, which I just want to make sure we deal with, is that if you can explain the lag time from between, the different members. So a concreter, if there's some stimulus coming through, a concreter might see some increased activity, 4 or 5 months after the sort of the building approvals figures. Is that correct? Or do you want to add any better context to that than what I just did?
Yeah, well, I guess when you look at the progress of a building project, it starts from the ground up rather than the sky down. So you've got suppliers that are involved in supplying the concrete, the steel on the ground, those sorts of things. So quite often those guys are quite often down the good end of a project where there's plenty of money in the bank. There's and they're all driven by, and we're talking about both commercial and domestic projects here because they're all progress payments being made. But you get towards so you've got a pretty good chance of getting paid for your steel, your concrete, your bricks, those sorts of things. Your internal fit out guys, they'll get paid okay in general. Your roofing guys, it's when you get to the final stages of a building project where you could get into a situation where they're actually running out of money. They've underquoted the project. There's no money in the can to pay for your finishing stuff. So the further down the food chain you are, probably the higher the risk for what you're supplying. But then, we've all seen the situation where if you're quoting on work and your work is continuing to be greater level of work from one month to the next, you can get away with that for a number of years. And we've seen that happen time and time again. It's when those new jobs start to decline, that's when you see those companies then hit cash flow issues, because that's when the rubber hits the road and they're found out. And then you'll see, administrators, you'll see wind-up applications, you'll see liquidators being appointed, because they've just gone past that tipping point where they're not in a growth spurt, they're in a decline. And we'd seen that particularly in the domestic market where the jobs were fewer, and so there were much more the same number of participants for fewer jobs. And we're certainly starting to see that in the commercial sector now, particularly with the high-rise builders and the commercial builders. if you look around the Brisbane skyline at the moment, you're going to see a lot less cranes on the skyline today than you would have seen this time last year.
Yep. Yep. Okay. Is there anything that you want to wrap up? Is there any sort of bow you want to put around this conversation? Anything you want to say which we haven't sort of covered so far?
Well, I mean, I'd just like to encourage everybody that's listening that might not be members of the Bureau or, you know, may be interested, but the Bureau, and I'm talking from experience here, it was the most valuable tool that I had when I was a credit manager in the building industry 30 years ago now. But without the data that the Bureau supplied, I could not have done my job as effectively as I was able to do it, you know, way back then. Because that, first of all, I had access to the data using the microfiche, but I also had a room full of members that used to meet every month. And I remember going into rooms where we'd have 50 people turn up to a Brisbane meeting and we'd be there all day.
Yep.
And the information that we got from those meetings was absolutely vital. It saved my bacon time and time again, just from the information that we got from those meetings. And then, you know, the data that would come in, you know, a new application might come in. The first thing we'd do, I'd get one of my team to drill down on the BICB information and provide that. And that would be one of the biggest things we'd look at. And then you'd look at a few other things. But, you know, if they had a pretty poor payment record on BICB, the chances of them getting account from the company that I worked for was pretty remote. Pretty remote. So it was a very, very effective tool. It's now an even more effective tool, and I'm talking about what we have today. And in the near future, it's going to be an even more effective tool. And, you know, ultimately what I'd like to be able to do with the Bureau is to actually integrate what we provide down a pipeline into our members' credit management data systems, you know, their management systems. How we achieve that, I don't know, but anything's possible.
You're an ideas man. Look, I just like to I'd endorse all that. The single smartest thing I ever did on reflection of all my years of being the compliance manager was to join the Bureau for that same reason. It just provided clarity around it wasn't the only piece of information that I had to rely upon, but it was like the building blocks scenario that you had that bit and you add that and then you add the BICB stuff, and that was really the cement. You know, if there was a whole lot of stuff in 60 and 90 days, and not just one or two members, but a range of members, it just was almost the final nail. You know, that it would help me make informed decisions. And the fact that the QBCC has gone and reached out to your organisation, 25 years later, fills me with some pride that therefore it's clearly that relationship, the benefit the regulator sees from it, has stood the test of time.
Their comment to me, Michael, when our data started coming down the pipeline to that system they built, they said it was an absolute game changer. Yeah,
and that's the point. So everyone out there who's watching and listening, and we'll make sure that we generate a whole lot of extra publicity out of this chat on your behalf, Wayne, is why wouldn't anyone who's in the industry want the benefit of that data?
Absolutely.
Why?
Absolutely. But I might be biased, but honestly, it's one of the most valuable tools you can have if you're a supplier in the building industry is to become a member of this Bureau.
Yeah. Well, Wayne, look, thanks for putting up with the technical glitches at the front end. We will circle back around and we will repost this on Facebook. So Facebook tomorrow. What happens also is that Emily will cut these up into little segments. So we'll probably get 15 or 20, segments, topics, and then we promote those all on our social media, and we'll send those to you as well. So it's just when we talk about one issue, it will just be cut into a 2 or 3 minute thing. Probably cut out some of the waffle of mine, but concentrate on yours, and and that just gets recycled around and around and around. So thanks very much. Look forward to catching up with you, because I know we've got some unfinished business to talk about. So all the best, and thanks again for your time, Wayne.
Thanks, Michael. Thanks for the opportunity, and thanks for those that tuned in.
Okay. Cheers, mate.
See you, mate.